Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And real quick, I just want to let you guys know that the group that me, Tokenizer, and JD have started is down in the top of the description below. Get immediate access to technical analysis, trading techniques, undervalued gems, exclusive portfolio insights, essential information, and also project research right now. If you guys are interested in that, definitely go check the link down in the description below to get ahead of the game for the next major cycle. Now, with that in mind, I do want to talk to you guys about this article here that got posted by Ripple on the 1st. 3 biggest challenges of rising interest rates on global banks. In recent videos, I talked about the liquidity nightmare that's here, right? Banks are being constricted. Liquidity itself is drying up, and there's a lot of problems. The thing is that cross-border trade is booming, and payment volumes are already back to pre-pandemic levels. But high interest rates in the US and Europe could threaten this comeback story. Now, there's 3 big challenges in here. I'm also going to go over a few things as well that I found very interesting about this article, but the 3 problems are shrinking customer portfolio, constrained credit, reduced liquidity, and limited investment and economic growth. Now, up here, we see a great quote, and it says, rising interest rates can also expose banks to greater foreign exchange fluctuations and expenses. Banks that respond by imposing additional charges or higher fees on cross-border transactions could drive even more customers towards alternatives like fintechs. You know what's funny about this is that Ripple already covers 90% of the FX global market, which is a $7.5 trillion per day market. It's huge. We also see at the bottom there, the risk factors presented by a shallower pool of similar customers is especially acute with a potential recession on the horizon, and as other consequences of rising rates put banks under pressure to find new customers. So we're kind of seeing a very interesting move here. We're seeing the fact that these big banks that are getting extremely greedy, especially in terms of the greater foreign exchange fluctuations and expenses that they are putting on customers, it's driving demand towards alternatives, like, for example, Ripple or Stellar or other major fintech companies, even around crypto or even outside of crypto. But then we also see constrained credit, reduced liquidity. Constrained credit supply leads to an overall reduction in liquidity in the financial system, which slows or inhibits financial activity of all types, including cross-border payments. Very interesting. So, how can we solve all of these big problems? Even in terms of like economic growth here, which they're talking about. And they're actually addressing SMEs within this one. Well, at the bottom, we see power of crypto-enabled payments. Crypto and blockchain could hold the key to a thriving global banking system amidst this evolving rate landscape by supercharging cross-border payments, boosting liquidity, and providing a source of much-needed growth into emerging markets. Very interesting. This is why I say, like, we're building up to that point. And by the way, they do mention the 90% of FX markets at the bottom there. But we're gearing up for the big boom event. The big boom event is test the traditional system to its limits and then go fully live with the new financial system that is dominated by this modern payment technology, aka crypto and blockchain. And also, it's funny. This one here, the International Monetary Fund highlighted concerns in the recent Global Financial Stability Report and found that rising interest rates have increased risk for banks and non-bank financial intermediaries alike. These worries were echoed in Ripple's 2023 New Value Report. What's funny about this is that when we look at that Global Financial Stability report, here's the financial stability risks have increased rapidly as the resilience of the global financial system has been tested by higher inflation and fragmentation risk. Now, obviously within this, at the bottom, they do mention crypto and blockchain and how it could solve these problems. This is from the IMF, but it's also written by Tobias Adrian. You guys probably know this individual. Don't worry, we will get into that here in a second. So we do see Chapter 1 analyzes the recent turmoil in the banking sector and the challenges posed by interaction between tighter monetary and financial conditions and the buildup in vulnerability since the global financial crisis. We also do see Chapter 2 examines non-bank financial intermediaries and the vulnerabilities that can emerge from evaluated leverage, liquidity mismatches, and high levels of interconnectedness. Tools to tackle the financial stability consequences of NBFI stress are proposed, underscoring that direct access to central bank liquidity could prove necessary in times of stress, but implementing appropriate guardrails is paramount. And then, of course, Chapter 3 analyzes the effect of geopolitical tensions on financial fragmentation, explores the implications for financial stability, including through potential capital flow reversals, disruptions of cross-border payments, impact on banks' funding costs, profitability and credit provision, and more limited opportunities for international risk diversification. So as we really kind of look at this, yeah, obviously the financial system as we know it is in turmoil. There's problems. There's, big deals happening with BRICS and the dollar's being tested, all at the same time that we see these organizations like the IMF, the World Economic Forum, the BIS, the ISDA, all of these giants. Well, guess what they're talking about? Well, all the spotlight is on DLT, blockchain, crypto, digital assets, CBDCs, things like this. Like, do you honestly think that this is all by coincidence? Tobias Adrian comes from a substantial background. He spent 13 years and 5 months at the Fed. He also has been working at the IMF for 6 years and 9 months. This is also an individual that spoke highly of Ripple. Going all the way back to 2020, XRP Crow posts this: international payments are expensive and the structure is not very well built. Ripple is an example because it has new technology that increases financial inclusion.
And, a large part of the population in the world doesn't have access to bank accounts. And even if it does have access to bank accounts, those are extremely expensive. It's expensive to make payments, wirements, international payments. So I think one of the big motivations for this new technology, right, because Agustin is asking why, is that there's huge financial exclusion, and these technologies have proven to increase financial inclusion enormously. So I think you have to look broadly around the world. I think this is one motivation, and I think the Ripple example is one example, and Norman has talked about that, is that international payments are very expensive, and the structure is not very well built.
And again, this is Tobias Adrian, the same individual that wrote this. But also, guess what? Let's go back in time a little bit. Here is October of 2020. Again, Tobias Adrian. What can be done to ensure improvements to cross-border payments are effective, sustainable, safe, and equitable? Here you guys have him literally talking about all of the benefits of Ripple. Then, fast forward to September 4th, 2022, just a year ago. Bullet Train, new tokens and platforms may transform cross-border payments and potentially much more. Tobias Adrian, train has left the station, right? Over here, Matthew Lemoy, IMF, January 2023. This was January 20th, 2023. Tobias Adrian, cross-border payments for the 21st century. No direct mention of any projects, but a lot of them are already working with central banks. Here we have cross-border payments for the 21st century. They literally talk about expanding on technology. They even talk about tokenization of payments here, where central bank reserves are tokenized so that you can trade these reserves across border in a multi-currency fashion. Tokenized dollars can be exchanged against, say, tokenized euros or tokenized yens in a way that creates trust. That's number one. We have mine for a common ledger. Of course, you guys probably know about the X platform that they talked a little bit about. I forgot what it was. It was like XC platform or something like that. And then also over here, they do talk a little bit about Bitcoin. They even talk about distributed ledgers. They talk about tokenized ledgers. We kind of went over this a little bit, but here we have from Tobias Adrian yet again. What makes me very confident is that we're heading in the right direction, is that the private sector is innovating and is already operating systems that are somewhat similar to what we are proposing. But the private sector cannot tokenize central bank reserves. The private sector can tokenize their own deposits, but that is never as liquid and as trustworthy as tokenizing central bank reserves. There's a clear role for the public sector relative to what the private sector is doing. But what the private sector is doing is both in philosophy and technology very closely related to what we are proposing. This is why I'm confident that it is both feasible and desirable, meaning the public and the private sector need to collaborate, which we're already kind of seeing. And also, here's one last quote here. It would upgrade the correspondent banking infrastructure. Exactly. Major banks would still play an important role, but smaller players would also now be at a level playing field because all banks could have access to the system. What have I talked about? The level playing field. There's a different question of whether non-banks could, and that depends on the jurisdiction, but banks could have access. So all banks could compete for cross-border payments, and so that should bring some of the monopoly rents down. Again, I tried to bring this up, not to grasp at straws here, but to literally show you guys that we have seen many connections back with the IMF, with Ripple, all of this centered heavily around cross-border payments. We already know that Ripple has been pioneering this technology forever to, bring about a major change around cross-border payments, which is a $156 trillion market right now, projected to be $250 trillion by 2027. This will probably have increased growth year over year, considering the fact that cross-border payments are not slowing down. And then also, right, remember that transforming global payments, enabling the Internet of Value report from Ripple, they were already working with the IMF back here. If we scroll all the way down on the left side, we already know that they were working with regulatory and policy engagement with the Federal Reserve, the Bank of England, Saudi Arabian Monetary Authority, and even the International Monetary Fund. They were selected specifically to serve on the IMF's high-level advisory group on fintech. So do you honestly think that Ripple is not a key player here? Even the Saudi Arabian Monetary Authority, the Infrastructure Innovation Partnership for financial institutions to leverage Ripple for cross-border payments. Almost everything that we see around Ripple is heavily centered out on cross-border payments themselves, and also to really kind of bring about the next generation of payment infrastructure. Even over here, though, right, as we look at a video. So here we have this video and then this video. I want to play both of these videos because they are very significant to what I'm addressing. So here we have a new world for global payments is coming. Faster payment systems will allow for financial inclusion, but first we need global interoperability and standardization. You guys probably remember this video that I included in one of mine recently. I'm not going to play this one because, like I said, we included it just recently. It was a very recent video. But this one is very significant. This is from Subjective Views, and we do see the cross-border agenda, a priority for the World Bank and the G20. The World Bank is asking questions they already have the answers to. For an example, here we have from the World Bank. This is a document that talks about stablecoins for cross-border payments. Of course, XRP and XLM both being one. And then also, here you guys have the World Bank document, central bank digital currencies for cross-border payments. Now, in this video,
cross-border payment.
Listen closely to what this 31-second long clip is stating. This is also from the same individual that is talking about how we are seeing a new world of global payments rising. Listen closely.
Cross-border payment is a priority also for the G20. I mean, for the World Bank, for the G20, and it's also with remittances in mind. How can we facilitate, make a quicker, cheaper cross-border payment? And this is an agenda on which there's a lot of work going on, and we're deeply committed to that cross-border agenda.
And remember, right, like although, yeah, the World Bank mentions RippleNet and Ripple and XRP, guess what? The G20 is already coordinating major moves with the BIS and Ripple. Remember that the G20 coordinated the move with the BIS working with Ripple on cross-border payments. SWIFT was also mentioned on there. MasterCard was also mentioned on there. And then also the G20 is working on global crypto regulations. Like, do you honestly think that this is all by coincidence? No. We are seeing the rise of a new global system. The entire world that we know of around payments and financial technology is changing. And in my opinion, I do believe that Ripple and XRP are crucial players for this. It's happening. This is a big deal. This is why I say, don't just focus on the short term, focus on the long-term growth here, because these connections matter. And it's not a coincidence that we are seeing the same talks. We're seeing the, drawback to the bullet train, and the train has already left the station and things like that. Like, it's very exciting to be in this space at this time, because even if it's not XRP, maybe it's XLM, maybe it's XDC, maybe it's HBAR, maybe it's, this is why I diversify my holdings. But we know that we're in the right space. We know that over the next couple years, this space will see exponential growth and adoption from institutions, from major banks, central banks. Like, what we will see going forward on in time is a revolution. It's a digital revolution. Anything paper-based will be digital. We are seeing that happen in real time. It's accelerating. And guys, I'm so damn excited. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. With that being said, guys, it's been Nick. Peace out.